Welcome back. I want to spend a little time taking a quick recap of the equity markets. Seeing a lot of weakness today, starting out for the week. Now, the top left-hand corner shows us the S&P 500. Every single blue dot over here represents a different S&P 500 stock, 500 altogether, and this displays each stock's respective RSI, relative strength index, on a scale of 0 to 100. Readings above 70 are considered very strong, below 30 are very weak. Obviously, we can see the vast majority of the stocks are between the 30 and 70 level, very much in the middle of the range. Now, on the top right-hand side, we see a more detailed view of this. Specifically, this tallest bar, for example, shows us that there are 124 stocks with an RSI reading between 50 and 55. 88 stocks with an RSI reading of between 55 and 60. So each one of these histogram bars shows us number of stocks at any respective RSI level. And overall, we can see the vast majority of the stocks have an RSI level 45, 50, 55, 60, somewhat in the middle of the range. Now, bottom left-hand corner shows us the same S&P 500 stocks within their 52-week range. Now, this is on a scale of 0 to 100. So, obviously, if you have a stock with a 52-week range of between 10 and 20, and the stock right now is 19, that would be at the very higher end of its 52-week range. The difference here is we can see that there's a greater cluster of dots towards the lower end of this chart. So while the RSI reading shows us that most of the stocks are within the 30 to 70, mostly around the 50 level, if we take a look at the same stocks within their own respective 52-week range, we can actually see the stocks are trading very much lower, closer to the lower end of their 52-week range. Now, bottom right-hand side, this shows us a more detailed view. So, for example, the highest histogram bar shows us 44 stocks are between the 30 to 35% 52-week range. And we can see there's actually very few stocks that are above the 50% range. So most of the stocks in the S&P 500 are trading at or closer to the lows of their yearly averages, or the yearly ranges, we should say. Now, with that said, this represents the S&P 500. There are 500 stocks across many different sectors. Top left-hand side, or the left-hand side of the chart over here, shows the different sectors and their own respective RSI. So, for example, those stocks that have the greatest relative strength in terms of their individual sector are the utility stocks. That is the Spider Trust Individual Utility ETF. Number two is the Philadelphia Utility Index. So the utility stocks, in terms of the RSI, do represent the strongest stocks, and those stocks with the weakest RSI in terms of sector are the gold, metal, gold, and silver stocks. So, for example, the gold and silver index, and then we have the absolute weakest is the ETF that represents the Vanguard, or the VanEck, I should say, Gold Miners ETF. Now, same group of stocks, but now in terms of their own 52-week range, those sectors that are trading close to the highest end of their 52-week range are, again, the utilities. Those sectors near the lowest end of the 52-week range represent the gold stocks, so gold, silver, metals, and miners industries. Okay, and those are definitely the outliers. So when we take a look back at the S&P 500 and we consider what stocks we may want to purchase or sell, or even sell short, we should always take into consideration the trend. And again, the strongest trends seem to be the utility stocks. The weakest trend seems to be the gold and silver and miner stocks. If we believe this current trend will continue, then certainly we want to trade in the same direction as those overall trends. If we're looking for a reversal, if we want to play the contrarian, then certainly we would try to look for the weakest ones to reverse higher and the highest ones, or the strongest ones, to reverse back to the downside. And we'll continue to track these sectors and the overall charts very carefully in the time to come. Hope this has been helpful. We'll talk to you again soon.